The price of gold has rallied to all-time highs, and investors in the yellow stuff have made some serious gains. Now, everyone is wondering where investors will move these gains into next. The most obvious catch-up trade is silver. That's because silver has historically followed gold, and silver's chart suggests its price is about to go parabolic. That's why today we'll be doing a deep dive into silver and telling you where its price could be headed next. My name is Guy. Stay tuned. Before we dive in, you need to know that nothing in this video is financial or investment advice. This is purely educational content intended to help you understand the silver market. Now, at the time of shooting this video, gold is trading above the key psychological resistance level of $3,000. This is great news for gold investors, but it's even better news for silver investors. That's because a gold rally has historically been followed by an even bigger rally in silver. Although silver has also been rallying recently, it still seems to be undervalued relative to gold. In other words, it looks like silver still has a lot more room to rally compared with gold. This is something that can be clearly seen with something called the gold-to-silver ratio. The gold-to-silver ratio analyzes how many ounces of silver you can buy for 1 ounce of gold. Investors keep an eye on this to determine whether gold is under or overvalued relative to silver, and whether it may be a good idea to rotate out of gold and into silver. When the ratio is elevated, this indicates that gold is expensive relative to silver, making silver more attractive as an investment. The golden rule, yes, pun intended, that many investors use is the 80-50 rule. If the gold to silver ratio is above 80-1, meaning you can buy 80 ounces of silver for 1 ounce of gold, then silver is undervalued and it's time to switch to silver. Conversely, if the ratio is below 50-1, silver is overvalued and it's time to switch to gold. Typically, a high gold to silver ratio isn't sustainable for long, and silver eventually catches up to narrow the gap. At the time of shooting, the gold to silver ratio is sitting at around 89-1 and has been steadily rising for some time. This suggests that silver is extremely undervalued relative to gold and that it could rally significantly in the near future. In fact, silver could experience gains that are even bigger than gold's in percentage terms, and that is because of its market cap. For context, it's the market cap of an asset that ultimately determines how much it can pump. The smaller the market cap, the easier it is to move the price. To put things into perspective, gold has a market cap of around $20 trillion, while silver has a market cap of around $2 trillion. This means that an investment that would move gold's price up by 1% would, theoretically, cause silver's price to move up by 10%. Notably, the same is true for any divestment. The result is that silver's price has been way more volatile than gold's. Oh, and since we're talking about silver, why not make this your moment to shine? Hit those like and subscribe buttons to help the channel out, and turn on those notifications too so you don't miss what's coming next. Now, just throwing the gold to silver ratio at you and calling it a day wouldn't exactly make for a great video, would it? Well, don't worry, because the gold to silver ratio is just one of many factors getting everybody excited about silver. As it happens, silver's price isn't just being supported by speculative investors, but also by silver's ever-growing demand across a number of industries. In fact, industrial use cases have accounted for more than half of silver's global annual demand over the last 5 years. This is because physical silver is incredibly versatile. For instance, silver has the highest conductivity of any element when it comes to electricity and heat, and is also known for its sensitivity to light and its antibacterial properties. This makes silver invaluable for a wide range of industrial applications, including brazing alloys, batteries, data chips, dentistry, EV production, 5G technology, glass coatings, LED chips, medicine, nuclear reactors, photography, solar energy, semiconductors, touchscreens, water purification, wood preservatives, and much, much more besides. Whew. And what's great about silver is that even as industries become outdated, they're usually replaced by newer technologies that also require silver. This is why silver is described by some as being the, quote, indispensable metal. For reference, there can be anywhere between 25 and 50 grams of silver in the batteries of most electric vehicles, since silver is both highly conductive and lightweight. Meanwhile, there are roughly 20 grams of silver in your average solar panel, thanks to the metal's thermal efficiency and reflectivity. And silver is also used in medicine. That's because adding silver to water releases silver ions that kill and prevent biological growth, helping hospitals to sterilize water systems, furniture, surgical equipment, and so on. And of course, silver is also used in smartphones. Now, while there's only a small amount of silver in each smartphone, less than half a gram, this quickly adds up on a global scale when you realize that, well, just about everybody has a smartphone these days. I bet that's how many of you are watching this video. Anyway, the point is that industrial demand for silver is only going to continue growing. Now, this could go a long way towards supporting silver's price, providing a bit of resilience against any downwards price action.
It's the place to be when you're in need of amazing crypto deals and opportunities. It's got savings that you won't believe, like money off those pesky trading fees. It's the Coin Bureau Deals page. Sign up bonuses and discounts too. The Coin Bureau Deals page. We put these deals together just for you, just for you.
But while the sound of silver's price rallying to new all-time highs must be music to many an ear, there is an elephant in the room that we need to address. Silver's previous all-time high was set way back in January 1980, when it hit a price of $49.95 per ounce. And while silver's chart does look promising, there's still a long way to go before it breaks through this level. The reason why silver's price spiked back in the day is actually pretty interesting. So to keep things short and sweet, 3 billionaire siblings, known as the Hunt brothers, worked together to pump the price of silver. It's believed that they accumulated over 100 million ounces of the stuff, then roughly a third of the world's privately held supply. This caused silver to rally from $6 per ounce to almost $50 per ounce. Needless to say, plenty of other investors caught on, going all in on silver in the hopes of making gains of their own. However, many, including the US government, saw this as a clear attempt to manipulate the silver market. So Uncle Sam stepped in. The Commodity Exchange, or COMEX, placed heavy restrictions on new purchases of silver, which led to a rapid decline in its price. This created panic among investors, driving prices down even further. Silver's price collapse was so devastating for the markets that it actually has its own name: Silver Thursday. But of course, all this was decades ago, specifically from January 1980 until the 27th of March 1980, which was when Silver Thursday happened. There was one other time when silver went parabolic, however, and even came extremely close to its previous all-time high. This was in April 2011, when silver reached $47.94 per ounce. So then, what caused it to pump that time? Well, the short answer is investor demand. In 2011, the Federal Reserve had committed to maintaining a zero interest rate policy for another 2 years, which basically signaled that the Fed was easing monetary policy. Naturally, this also meant that inflation was right around the corner, so people flocked to assets like silver to hedge against these measures. To make matters worse, the US government then began debating its debt ceiling, which caused Standard & Poor's to downgrade Uncle Sam's credit rating. This downgrade raised serious concerns about the stability of the US dollar, making precious metals much more appealing as safe haven assets. Since that rally subsided, though, silver's price has stayed relatively stable, assuming you don't count the leg up caused by the pandemic. However, silver's price has been slowly creeping up since Q1 of last year, and we believe it could be perfectly positioned to explode higher. So then, how high could silver's price realistically go in 2025? To determine that, let's take a look at what some of the experts have been saying and work out our own reasonable target from that. So, on the lower end, we have Citibank, which predicts that silver will reach just $35 per ounce in 2025. This forecast is also matched by Morgan Stanley. Meanwhile, UBS is slightly more optimistic, giving a silver price forecast between $36 and $38 per ounce. So presumably $37 is what they see as a reasonable target. Goldman Sachs also predicts that silver will reach $37 per ounce in 2025. Elsewhere, JP Morgan is slightly more bullish, giving a price prediction of $38 per ounce, which is the same forecast given by Deutsche Bank. Meanwhile, Saxo Bank and WisdomTree both give price forecasts of $40 per ounce for silver. Investing Haven is the most bullish by far, though, giving a silver price prediction of anywhere between $48.20 and $50.25. What this means is that if we take the average across all of these predictions, this gives us an overall forecast of $38.80 per ounce of silver in 2025. We should note that at the time of shooting, the price of silver is already around $33.60, so this translates to a 15% rally from here. Here's the thing though, these predictions were made by experts who can't afford to give outlandish price forecasts. That's simply because if they're drastically wrong, it would instantly damage their credibility and potentially hurt their business in the process. With all the momentum building in the silver market right now, we wouldn't be at all surprised if silver's price actually rallies far beyond that average. From our perspective, there's a key resistance level at around $35.20. However, if it can push past this level, and we believe it can, silver's next resistance level is at around $41.35, with another at around $42.90. Note that this is a 2025 forecast. Now, all this might sound incredibly bullish, but there are a few obstacles that we need to consider. The first relates to the very reason why precious metals like gold and silver have been rallying in the first place: uncertainty. You see, the reason why precious metals have seen significant price appreciation recently is because most investors see them as a safe haven. This is due to a number of factors, such as rising geopolitical tensions. From the ongoing conflict in the Middle East to the war in Ukraine and the rising trade tensions between the US and several other global powers, uncertainty is everywhere. As tensions rise, assets like silver become much more attractive for investors of all kinds. However, some of these tensions are slowly beginning to ease. A ceasefire between Russia and Ukraine is currently being discussed, and while there's certainly a long road ahead before the conflict is resolved, things are at least moving in the right direction. Now, this is obviously great news, but the harsh reality of the markets is that as uncertainty begins to fall, so too does the appeal of safe haven assets like silver. Another cause of uncertainty, meanwhile, is Trump's tariffs. That's because many investors have been worried that Trump will implement tariffs on precious metals as part of his wider tariff regime. This has caused many investors to scramble to move their gold to the US before it's too late, causing supply concerns in the process that have helped pump gold's price. And you can learn more about that in our recent video right over here. However, if it's confirmed that tariffs won't affect precious metals, this uncertainty instantly disappears, and silver's appeal as a safe haven asset will immediately lose some traction. The same is true if the final tariffs turn out to be much less severe than investors expect. Industrial demand for silver could also fall, especially in the green energy sector. Recall that this is a major demand driver for silver. However, Trump has recently signed executive orders that essentially move away from renewable energy and back towards fossil fuels. This could deal a huge blow to green energy and EV companies, which you'll recall use silver in their production. And of course, this all assumes that gold investors will rotate into silver in the first place. Many market analysts believe that gold investors could actually rotate into gold mining stocks instead, and that's simply because the increase in gold's price means that these companies are much more profitable. Alternatively, investors could move out of physical gold and into Bitcoin, which is seen by many as digital gold. That's because BTC has a capped supply of 21 million and is completely decentralized, unlike gold's infinite and uncontrolled supply. Like gold, BTC is also used as a store of value, and its added volatility means that many see Bitcoin as a high-risk, high-reward gold play, just like silver. BTC is also becoming increasingly popular among institutions, and heck, the US government recently created a strategic Bitcoin reserve. This could attract traditional gold investors to Bitcoin, since the regulations around crypto are now greatly improving. But back to silver and the question of what potential catalysts are on the horizon that could significantly pump its price. Well, one of the biggest catalysts could be the Federal Reserve easing monetary policy. The Fed's recent forecasts suggest that it expects to cut interest rates twice this year. As we mentioned earlier, if the Fed does decide to cut interest rates, this could lead to fears that inflation will return with a vengeance, drawing investors to safe haven assets like silver. At the same time, fiscal spending by the US government could benefit silver's price in multiple ways. For example, Trump is pushing to increase military spending in the US. This could support silver's price, since silver is used in things like weapon systems, missiles, radar, and satellites. The industrial demand for silver should also continue to grow globally, making silver a top choice for institutional and retail investors. In fact, the speculation around the silver market alone could even be enough to pump silver's price in the short term. This could also cause physical supply constraints for silver, as its available supply is limited compared to the high volumes of paper silver derivatives traded in the market. And as demand for physical silver increases, the supply could tighten, potentially leading to a shortage. This could drive silver prices much higher, much like how the recent liquidity shortfalls have pumped gold prices. And I'll remind you that you can learn more about gold's supply concerns using the link in the description below. So, while silver doesn't have the glitter of gold, nor the incredible technology of Bitcoin, it's definitely still an asset to watch carefully. Okay folks, if you liked that video, then show it some love by smashing those like and subscribe buttons. If you want to learn about tokenized gold, you can check out our recent video on that right over here. And if you want to learn about what gold's rally means for BTC's price, then you can check out the video right over here. Okay, that's me for now. Thank you all for watching, and I'll see you next time. This is Guy, signing off.